All right, here we go. What's up, ladies and gentlemen? This is Sean Ray here, and I'm going to be going over something today. This is my second time streaming, so if you guys watched the first one, this is kind of a recap of the first one, but now I kind of know how to do it better. So thank you for sticking with me. Hopefully the audio is good. If it's not, then we'll figure this out in the future. But let's get into it. I really want to encourage everyone to comment here. And so make sure to go down there and comment any questions you guys have. But the point in today's video is I want to go over the difference between what an Airbnb property looks like and a regular property. There's a current Airbnb investor that was about to close on a home, and they backed out like a day or two before closing. And now they want me to find them a 1% deal. You know, if you go all over the website, the forums, the books, everything like that, it's all about finding that 1% rule of the 1% deal for a rental property. Now, in rural cities, it's totally normal. Like a 1% rule in a rural city is fine. But when it comes to doing something like a major city, like Dallas or close to Dallas, the 1% rule is kind of laughable. So we try to get as close as possible. I found a deal in Grand Prairie that he wants. He wants to stay in Grand Prairie. I found one in the price range that he wants and in the returns that he wants, and it's as close to that 1% rule as possible. And so it's 0.79. And you can adjust some data here or there and make it to where it gets closer or further away to the 1% rule. So let's go over this property, and then I'm going to show you in my Excel spreadsheet, it's actually Google spreadsheet, the numbers, the breakdowns, and if I did it right. Like I haven't done a long-term rental in a while. I've been so focused on Airbnb, so maybe I did something wrong. So I'm going to share with you guys my spreadsheet, and I want you guys to point out and say, hey, you're an idiot, you did this wrong, or whatever happens to be. Maybe I forgot to add something in or something. I don't know, but I want you guys to tell me. So let's go take a look at it real quick. Let's bring up the first thing, which would be let's do the listing first. That way you guys have an idea of what you're looking at. Boom. Oh, cool. Okay. So we have right here Keelan Court, Dallas, Texas. Let me show you where it's at on the map. Okay, so here is Sanders. I have a whole list of properties that I was sending to him. So it's over here, right off of Loop 12. So it's a really nice area. You have a whole lot of basically commercial properties, whatever I'm trying to say. It has a lot of businesses over in this area, and so there's a demand already for this particular property and the area that it's in. The property itself is a beautiful property. If you guys can see here, on the inside it looks nice, very marketable. Outside, not so much. Looks like a good rental. Now, is it a perfect property for me to sell it on, like, for a highest dollar? Probably not, but will it do for a rental? Yes. Now, in this area, the rentals go for a basic busted up rental is like $80 to like $90 a square foot, maybe 120. Let's see if I can show you that too. If you see here, the price per square foot to buy something is in that 200 high to 120 low. Whereas if you see here like a 120 property, it doesn't necessarily look the best. And this is me filtering out all the bad and sticking with the best possible investments. This could still even possibly work as an investment. But let's focus on that first one. Keelan, there you go. So this one is the one that is the closest to it as possible. So it's $152 per square foot, and $152 per square foot in an area that rents for 80 cents per square foot, all the way up to like $2 per square foot, but really like $180 per square foot. To find a home that's $150 per square foot is pretty awesome. And so whenever you factor in the fact that it's 3 beds, I don't want to put it on the high level. It's not gonna be shooting that $1.80 per square foot kind of range, because it's only 3 beds and it's a tad bit older. It's 1986. There's some over there that are 2 stories that look really nice, and that's why they're getting those higher price per square foot. So let's put it into the Airbnb calculator, but I switched it over to be a long-term calculator. And we have all the datas here. If you guys can pause if you want to look at all the numbers I have put in here. Please, like I said, rip me up if it's wrong. Then definitely let me know. The interest rate is 6%, down payment 20%. I have on there that it's going to be around $1,746 for the monthly mortgage. I think that's about accurate. It might be a little more, might be a little less. Here's the square footage and the price of square foot to the rental price per square foot, which I have at 1.2, which gives me $2,090 a month for a rental. And based on the other rentals in the area that I've seen that have been recently rented, that's totally reasonable. You could go a little higher, but just because I don't want to mislead anybody, that's a reasonable number. Your monthly output, this is where I can get a little bit controversial, but vacancy rate 5% is typically standard, which is about $100 a month. You want to kind of like factor in for at the end of it. You want to try to save that in case it takes a long time to re-rent, which it shouldn't, but whatever. But the capex is where a lot of people beat me up on. I put 5%. A lot of people put 10%. Some people even put more, like 20%, which is crazy. But if you have a decent home, you buy it right, you have an inspection, you make sure you know what you are looking forward to. Surprises, new air conditioning systems, have to redo plumbing, all this stuff like that. Then you don't really need to worry about having a super high capex, because you know what you're getting yourself into. If you have a busted up, old, beaten up property that you're doing a lipstick on a pig and just making it look nice, but it's actually a trash property, then increase your capex. Management fees, some people do 20%, other people do 5 to 8%. So I'm just putting 10%. These would be about $200 a month. After it's all said and done, we have a percentage of the home price right almost at 0.8%, which is really good for Dallas. Very, very, very good. And then if you throw in that $1,746 on top of that $400 a month you're having to pay in monthly fees, then you're looking at a annual expense of almost $26,000. But your revenue is just over 25, so you're actually almost losing $900 a month. I'm sorry, $900 a year, or $74 a month is what you'll be losing in money. And if you invested $59,000, and with this amount of return, you're going to be doing -2% cash on cash return. And for those of you that are new to the channel, I normally talk about cash on cash return. It's all about the cash, because you have to be spending as little money into these properties as possible to get as much money out as possible. I don't like that whole buy the whole thing cash thing. So it's all about leveraging. I put down there that the home is at a 4% appreciation. The market in that area is pretty slow. It's not like in Dallas. Certain parts of Dallas we see 20% appreciation, and year over year, crazy. But in this area, Grand Prairie is pretty slow. So 4% is pretty healthy. And then if you include the profit, quote unquote profit, which is actually not profitable, plus the appreciation, you're looking at just under $10,000 a year in profit, including equity, which is going to bring you around like 16% ROI, depending on how you manage your ROIs. So On paper, I guess it could make sense if you include the equity, but we're not even putting in the debt pay down, which is your IRR. If you do your internal rate of return, which would be this right here plus your debt pay down, then you're going to be looking a lot better, and the numbers and the percentages are going to be look a lot better. But in the end, if you're not making at least a couple $100s a month on your rental, I mean, with most people that are trying to do, I'm going to leave this up just for a couple more seconds. That way you guys can look at it. But with most people that are trying to do long-term rentals in the past, before I got into the Airbnb business, they just wanted to make $100 a month. As long as they're making $100 a month, that's all they cared about. It was all about the equity and the debt pay down. At the time, I thought it was pretty crazy, but they were buying homes in areas of Dallas right now that were 200. I was doing $250,000 homes for rentals. They were barely profitable, but now those same homes in those areas, back when I was helping those people, compared to now, I can't sell one of those homes for less than $500,000, $600,000. So they made absurd equity over the lifetime from there to now. Will that continue to grow up in such a crazy rate? Who knows? I don't know. And no one does know. Like, everyone that's trying to tell you that the real estate market's going to pop and prices are going to fall off and blah, 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 no one knows. You just have to do historically what is a pretty healthy growth rate, which is like 5%, 3%, something like that, 6% for nice markets. But yeah, that was a crazy growth rate that we just went through. So with this being up here, does it make sense to do an Airbnb still? Yes. Maybe not in Dallas if you're too scared to take the regulations and go for the gut and just do the option 3 that I mentioned in the other video and take the maximum amount of risk. Then maybe Dallas isn't the county you want to be in. But I just got one in Cockrell Hill, and there's no regulations against Airbnbs in Cockrell Hill. Join me over in Cockrell Hill. Grand Prairie, their regulations on Airbnbs are really manageable. It's just basically pay your hotel tax and get yourself a license and approval by the Grand Prairie city. And their ordinances are very reasonable, very, very reasonable. Same thing with Frisco. I just looked up in Frisco. I talked to one of the people on the phone, and they have very reasonable ordinances. They're just play by their rules, do the zoning, do the hotel tax and the permits, and that's it. Just have an ability for them to reach out to you, or someone to reach out to you if things go out of control. There is still a method and a path to make thousands of dollars a month in profit for these homes, but you don't need to buy $1 million home in Frisco, or you don't need to buy an $800,000 home with a pool in Plano. There's only a certain amount of people in America that can afford a $1,000, $1,500 a night fee on the weekends, of $500 a night on the weekdays. These people are not going to Napa. These people are not going to certain parts of San Francisco, Miami, New York. They're coming to Dallas, and so they don't have the money that can support a whole slew of luxury Airbnbs in Dallas. It's great to make $10K a month. It is. Oh my God, it's wonderful. But it's all about the cash-on-cash returns. So if you can make the same cash-on-cash returns at a $500,000 property, $800,000 property making $10,000 a month, then shoot for the same amount of returns, but do it for a house that's $300,000 to $400,000, and you're making, $6,000, $7,000 a month revenue. Maybe even be happy with 5 or 6. Right now is not the time to be picky about only making a crazy return on your Airbnb. If you can make a great return on your Airbnb compared to what these numbers look like, look, this is what you have. This is what you have to deal with. Unless I've messed up this calculator, by all means. I know there's people on my YouTube that are very specific and really writing down all the details of everything I say and call me out when I say something wrong. So if that's you, I need people like that to help me get better and help us as a community grow and get better. Tell me if I messed up on this calculator, and if I did, I'll switch it immediately, and we'll see what those new numbers are. I'll make a new video being like, oh, I was wrong. Here we go. Thanks to blankety blank for commenting below and telling me that I was wrong. but still do look into Airbnbs, but just do a lesser quality Airbnb. Just do a $300,000, $400,000 Airbnb in a different city. That's all I'm saying, guys. Lower your expectations. Try not to do these crazy numbers and be happy, because if not, this is what your future looks like. All right, guys, thank you so much. I look forward to seeing you in a new video. Hopefully this video format is nice. If you guys like it, continue to comment and tell me that you like it. I can do deal breakdowns, you know, every other day or once a week, something like that. If you guys have a deal in Dallas or around Dallas that you guys see, send it to me, and I'm more than happy to break it down. If you guys want to buy an Airbnb or a long-term rental, or you need to sell your current long-term rental or sell your current Airbnb, then I'm your guy. I'll help you out, and I'll make sure that it's done quick and easy. But if you want me to list your property for rent, I don't want to deal with that. No one wants that. All right, see you guys.